Good morning, good morning, good morning. It is Thursday, the 15th of August, I believe. Here's Mr. Brown, punctual as ever. Let's get him on board and then we can crack on. Hello, are you there? Hello, Mr. Brown.
Good morning, Ryan. How are you doing?
I'm all right, mate. How are you?
I'm all right, mate. I'm not too bad at all. I hear you have a very big day ahead.
I do have a big day. Firstly, before we go any further, can I just check? Oh fuck, something wrong with Twitter search function by the looks of it. So I'm gonna have to wing the disclaimer because I normally read it off the flyer. What was I gonna say? Yes, big day ahead. But firstly, just checking you can hear me okay, because I'm trying a new method of rather than hold my phone, I'm pitching it up. Can you hear me okay?
Yes, I can, loud and clear. I'm slightly questioning now why you don't just plug yourself some headphones in, because surely that would be easier than both of those methods.
Because why do it easy when you can do it hard? Oi, oi. Anyway,
Oh,
God.
God.
Right. Anyway,
Oh,
I better get the
no.
legals out straight away because Mr. Bernard's listening, and I don't fancy the HR pull up later on. Nothing discussed on this Spaces session constitutes trading or investment advice, or indeed infers any kind of endorsement by PiQ Global Limited, Trainers PiQ or PiQ Suite, or its affiliates, including the hosts, which is Mr. Michael Brown and myself, Mr. Ryan Paisley. Yes, big day today. I am meeting up with some ex-colleagues and that are still friends, that are all institutional brokers, and we are going to the races. We are going to the evening races at Chelmsford. So yeah, so good luck tomorrow. I'm wishing you good luck with me tomorrow because I will be in a bad way.
Well, I'm sure you will, but it's going to look like four dads out with one of their lads at the races this evening, isn't it?
Well, to be honest, it's like one dad out of his lab when you take me out. Let's
Uh,
be honest. And I'm
yeah,
like 20 odd years
true,
old. Well, nearly 20 years older than you.
true, true.
Yeah, I know my place. I've got like a little unaccompanied child badge with me. Anyway, right,
Oh
what happened
dear. Shall we
yesterday?
crack on? Indeed, let's get onto safer ground quite quickly. Good morning, everybody. It was an interesting day yesterday because, as is so
Was
often
it?
the case, really, no, I was going to say, as is so often the case with these big market events, they're bigged up in the run up to an event, whether it be payrolls or CPI or whatever, and then the data comes out and the reaction's just kind of a complete damp squib, and that's exactly what we saw with the CPI figures yesterday. I think the reaction was very, very limited indeed. Equities ticked marginally higher with the S&P up by about 0.4% at the close. Treasury yields were pretty much unchanged across the board, and the dollar index was stuck in a pretty tight 102.30 to 102.70 range for most of the day as well, although we did see the euro hit fresh year-to-date highs against the dollar at 110.47.
Boo.
Indeed. Although it is, of course, worth noting that the bulk of that move did take place before the CPI figures came out. Speaking of CPI, it was pretty much bang in line with expectations. Month on month, CPI rising 0.2% in July. The core figure also rising 0.2%. Both of those bang in line with consensus. On a year-on-year basis, headline CPI rose by 2.9%. That's just marginally below the 3% that economists had been expecting, and it is the lowest annual rate since March of 2021. And core CPI rose by 3.2%, which is bang in line with expectations, but still the lowest since April of 2021. I think we did see a very modest knee-jerk hawkish reaction when the data crossed, and I think that was just because folk were positioned for a cooler number after the cooler than expected PPI figures on Tuesday afternoon come to pass. But really, it was a case of, the data passed without event. It certainly just cements the case for the Fed to deliver the first rate cut of the cycle come September. And even some of the more hawkish members on the FOMC are now starting to endorse that. We heard in the early hours of this morning from 2024 voter and Atlanta Fed President Raphael Bostic, who was saying that he is now open to a September
Just,
rate cut.
just in
Previously, he
case
was
anyone
saying,
was wondering, no, he's not one of the Teenage Mutant Ninja Turtles.
oh, jeez.
Well, mate,
his,
you can't take anything for granted. Like I read this morning that there's a study out in 2017, I believe it was, that 7% of Americans believe that chocolate milk came from brown cows. So that's who
oh
never
Christ,
overestimate your counterparty. I'm sure Conks, who is listening, will
yeah.
agree. But anyway, yeah. So go on. What we talking about? Teenage Mutant Ninja Turtles. Go on.
Uh, Bostic saying he's
Heroes in a
open to a
half
cut in
shell.
September.
Turtle power.
Um,
I've had a lot of coffee
oh
this morning.
Jesus Christ. He hasn't even had a
I have.
drink
I've had a
yet.
lot of coffee.
Fucking hell.
Can you tell?
Oh God. Yeah, I can. I need to find a way of muting you
Oh,
somehow. Bostic open to a cut in September. Previously said he didn't want to cut until December. So even the hawks on the FOMC are starting to come
ah,
round to that view. The market, though, is still pricing quite an aggressive path, just over 100 basis points worth of cuts from the Fed, despite the CPI data yesterday, which seems a little bit too aggressive. That was pretty much it from yesterday. We did have some Eurozone data. Industrial production fell by 0.1% on the month in June, building on the 0.6% decline that we saw in May. And GDP was unrevised, with the economy having grown by 0.3% on a quarter-on-quarter basis in the second quarter, a second estimate of GDP. Only one other thing worth mentioning is we did see some continued softness in the commodities space. Both gold and WTI down yesterday, notching back-to-back daily declines, and front WTI closing around $77 a barrel, and importantly below the 200-day moving average once more. That is pretty much it from me. So Ryan, if you can focus for
do
2
I have
minutes, we can
to?
have a geopolitical
Do I
rundown.
have to? One sec.
Yes.
Right. Hang on, I'm just trying to find. Right. Cool. Right. Yes. Where am I? What year is this? Who is the president? Geopolitical headlines via our friends at News Squawk. As always, unfortunately, I start in the Middle East, where it's always a barrel of laughs. The US Secretary of State Blinken and Qatar's PM warned all sides not to undermine the Gaza ceasefire talks set to open in the Gulf nation. It it was a veiled warning to Iran, Hamas, and Israel, basically. We have heard this morning, I believe a little while ago, that Hamas said that they weren't going to attend the talks directly, but they would talk to Qatar if there was positive signs coming out of the talks via Israel, or from Israel, should I say. Um, Further, we've got US sources told Axios that former President Trump spoke with Israeli PM Netanyahu on Wednesday and encouraged Netanyahu to accept the deal to free hostages and for a ceasefire in Gaza. Side note on this, if we remember a week ago, maybe 2 weeks ago, Trump basically said, well, actually, not basically said, I think he actually said, basically, God help Hamas if the hostages aren't released by the time he gets in. So yeah, there's that. The IRGC, which is the Iranians basically, linked hacking group, the APT42. Someone needs a rebranding. Has been targeted.
I was going to say that's a catchy
Yeah,
name, isn't it?
yeah, we love the APT42. We don't really. Oh, that was a joke.
No,
Has
oh
been
God.
targeting personal accounts of individuals connected to President Biden, VP Harris, and former President Trump, including current and former government officials. Sidebar again, we are going to see a ton of headlines and news stories about hacking attempts and stuff as we go further into the whole election cycle in the US. We're already seeing an increase in amounts of those. Moving away from the Middle East, finally, Russia conducted a missile attack on Ukraine's Odessa, which targeted the port infrastructure and injured one person. We've had South Korean President Yoon laid out a blueprint for establishing a unified Korea and said that freedoms enjoyed by the South or in the South must be extended to the frozen kingdom of the North. You know nothing, Jon Snow. No, that they News Corp didn't tweet that or post that. That was me. Anyway,
I don't think you needed to clarify that. I think we worked that one
again,
out.
yeah, right. Again, sidebar from my own knowledge of reading this yesterday that apparently North Korea, big old Kim, he is opening up the north of North Korea, North Korea, to tourism. So get your holidays booked.
Oh, the old Club
Well, do you know what?
1830 trip out to Pyongyang will be a
Well,
good
I'm
laugh,
thinking
won't it?
PIQ week away. Fancy it? Blast from the Republic. Anyway, that's the stuff from.
Ryan, you're lucky not to get nicked for what you say in the
Well,
UK. You'd be in the
Oh,
gulag within an
do
hour.
you know when you said nicked, I wondered where this was going. So I'm glad. I'm
No,
glad that
don't worry.
work account right. Work account right. Moving swiftly on. Right. So that's the. Oh God. Oh no. Right. Going back to BHP. BHP's Escondida copper mine that we spoke about yesterday. The latest on this is the striking union at the mine failed to resume formal negotiations yesterday, although operations continue under contingency plans. So if we remember, BHP have been accused of shipping in workers illegally to cover for the ones that are striking. This isn't getting better, but as we just said, the operations are currently continuing. Obviously, all eyes on how that deteriorates. As we said yesterday, as well as a reminder, my own personal opinion: don't trade the deterioration, wait for it to deteriorate, wait for some premium to be priced into copper on the back of the deterioration in output from this mine, and then sell it if we get some good news headline lands. I think that's the safer play. But again, nothing is investment or trading advice. If you're listening to me, you need your head seeing to. Moving away from News Squawk stuff, so just two things that PIQ, which is an awesome platform by the
Oh
way,
God.
posted yesterday that were flagging that there's a possible strike at seaports in the US on the East Coast and the Gulf of Mexico, which could last for a few weeks to even months. And they're saying that even a back or even a striking action that kind of locks down stuff for a few weeks, because of the way things are all very just in time over there, like small backlogs lead to longer backlogs. It could take to 2025 before we start seeing everything resume. So all eyes on that. Obviously, we know that shipping and port congestion leads to inflation. So obviously, that's going to probably get further headlines as more people pick up on it. Moving north. There's also industry and shippers are bracing for Canada rail stoppage and fear a catastrophe. Um, as a reminder again, Canada, one of the biggest countries in the world, there's a lot of goods and services that are, it's actually, in fact, the world's second largest country by area, and relies heavily on trains to transport everything from grains, beans, automobiles, potash, coal, everything basically. They're a massive exporter of all these things. If we get this strike that cripples their train lines, it could be a massive impact to a lot of things. So again, something to watch. We've tweeted about it, because we're just awesome. I believe. Is there anything else? I believe that's about it, mate. To be honest, from my end. So, what's happened this morning? What have we got to look forward to today?
What? I was just going to say, you talking about train strikes, just send Rachel Reeves
Oh
over there
yeah,
because, she's given them all a 15% pay
mate.
rise for doing fuck all. So,
Mate, they don't even have to like turn the steering wheel. Do you know what I mean? It's just forward and back. I can do that. Also, it's already automated on the
automate them.
DLR. Like,
Yeah,
fuck. Anyway, what are we talking about again? Oh,
honestly. Well, we could talk about that all
you
day,
love
but
it
we
moan up as
probably
much as
shouldn't.
me.
Um, oh well, really, especially about that. Anyway, moving
Moving
on.
on.
In terms of today, we've already had a few bits and bobs out overnight. Actually, it's been quite a busy session in terms of data
Sorry,
and
stop,
news
stop,
flow
stop, stop. I
through.
need to just quickly read this out. So Surav, our lead developer, like basically my little mini me, has just messaged me and asking if he can quickly jump on a call about something technical with PIQ. He's then gone, oh, sorry, I've just realised you are in Michael Brown. Surav, if you're listening, I can assure you I
Oh
am
no!
not in
Oh
Michael
god!
Brown.
Oh no!
I'm
Oh
hoping that's
god!
a translation error. But anyway,
There's
carry
a
on.
there's a big language barrier there. Oh
Oh,
no!
what a for
Oh,
those with
sorry. Could you?
I apologise for the
Oh,
mental imagery.
could you just excuse me for 2 minutes while I vomit, and then I'll come back and give you a. Oh God.
Oh, we're back.
Um, where the hell was I? Overnight,
Oh yeah.
yes, it's been a busy session in terms of news and data flow, although volatility has been a little bit light. We had some employment data out of Australia, which was a bit of a mixed bag, with unemployment rising to 4.2% for a prior 4.1, although that unemployment increase looks primarily driven by higher labour force participation, so more people coming in to the labour market to look for a job, with participation rising to 67.1% from a prior 66.9. So I don't think that's as concerning as the data would look at first glance. And of course, the economy also added just over 58,000 jobs in the month of July, building on the 50,000 that were added in the month of June. So the labour market looks to be ticking along relatively okay down under. We also had some Chinese economic data slash made up statistics out overnight. Industrial production rose by 5.1% on an annual basis in July, a modest slowing from the 5.3% that we saw in June, while retail sales in the same month rose by 2.7% on an annual basis, a modest quickening from the 2% that we saw in a prior month. We also had, this morning, GDP figures out of the UK, the first estimate of second quarter growth, bang in line with expectations, with the economy having expanded by 0.6% on a quarter-on-quarter basis, as near as makes no difference, unchanged from the 0.7% pace that we saw in the first 3 months of the year, with growth being underpinned primarily by the services sector. Looking ahead to the rest of today, we've got a policy decision due from Norway in about 15 minutes' time. The Norges Bank set to keep rates unchanged at 4.5%. The market pricing absolutely no chance of any policy shift at this meeting, but pricing a very modest 21 basis points of cuts by the end of the year. Looking ahead to the US session, we have a couple of notable releases given how the market continues to focus on worries over US economic growth and the cracks beginning to appear in the labour market. Both of these releases due at 1:30. Firstly, we have the latest retail sales report. Headline sales expected to have risen by 0.4% on a month-on-month basis in July, having remained flat in June. The key control group metric set to rise 0.1% on the month compared to a prior rise of 0.9%. And of course, the control group is the basket that feeds primarily into the GDP report. Also at 1:30, we have the latest jobless claims figures from the United States. Initial claims expected at 235,000 for a prior 233. Continuing claims expected at 1.87 million for a prior 1.875. Neither of these prints pertain to the August non-farm payroll survey week, but as I said, given the market concerns over potential fragility in the US labour market, both should attract more attention than usual. Rounding out the US data docket at 2:15, we have the latest industrial production figures, and that's expected to show production having fallen by 0.3% on the month in July, compared to a 0.6% rise in June. A few other bits and bobs to keep an eye on. Obviously, we've heard from the Fed's Bostic already this morning. We hear from the Fed's Musalem and Harker this afternoon. Musalem, probably the one to watch. He is a 2025 voter and has previously been relatively hawkish. And also, just on the corporate earnings front, before the market open, we hear from Alibaba, and we also hear from Walmart, who are one of those consumer bellwether stocks that we like to
love a
focus
bellwether.
on. And that I do indeed. And that is pretty much your lot for today.
Perfect. Well, thank you for that. And again, I apologise for the mental imagery to our listeners. I've already had a few complaints, work account Ryan, etc., etc.
Yeah, there's going to be a complaint coming from me in a
And I
minute as
would
well, I
like to
think.
formally apologise in advance to, most importantly, MrBrown, because I am going to be absolutely shit-faced tomorrow. And also, but listeners, it's probably worth tuning in if you don't tune into anything else. Right, as always, if you are trading today, keep it tight. If anyone knows any winners that are going to be racing tonight at Chelmsford, please let me know, because PiQ needs to make some money. And Michael, I will see you maybe tomorrow.
Yes, indeed. I will
See
see
you
you then,
later.
if you're
Well,
alive.
see you.
Cheers.
Bye
Bye
bye.
bye.